in this leg. So it's not going to be trying to find an order block. Up here, about 50% of the price leg from this short-term high to down here. This is going to be real high probability. This is really high probability as well, but it requires a lot more analysis. This one here, when you know what it's reaching for, this is the easiest. In other words, what I'm outlining here, and for some of you that are in the 2021 group, you're looking at this saying, this is too simplified. I don't know what you mean. I don't know what you mean. Trust me. I'm going to show you an example. We used it in real time, but I'm going to show you what I mean. Getting rich, okay, getting wealthy, getting to the point where you don't need to work anymore and you can find enough trades in the marketplace to fund yourself and your lifestyle, whatever that lifestyle is, fill in the blank. It's going to be seen with these trades right there. When you have all the backdrop over here in a bearish market, these are the easy taking candy from a baby type trades. And most of the time, when I was doing examples on Twitter, unless I was showing my algorithm without teaching it and showing off, I was doing a lot of these types of trades, or vice versa when it's bullish. And we'll see a bullish example before I close the video. But these ideas of knowing where it's likely to go and not making a big deal about all this, because this is where all the trolls would say, yeah, but he didn't sell it there, but he didn't sell it there, and he didn't sell it somewhere in here. I'm selling it in here. But they don't know what I was doing back here. I'm just choosing this as an example. And when I was on baby pips, these are the examples I was showing also, where they're just easy over and over again. And I wanted to see if folks would pick up on it. Nobody was picking up on any of it. Like, I felt like I was a Martian visiting Earth. Everything I said, no one could understand. But anyway, the point is, this area here is the highest probability shorts for bearish order blocks, because it's in a hurry to get down here. You know it's likely to go down there. And it might be relatively equal lows way back over here. And or it might be a single low that it's going to try to race to get down below. But this right in here, this peak is going to have the highest, most trustworthy bearish order blocks you'll ever find in your life. If you learn to wait for those types of setups on all time frames, this could be a 5-minute chart, this could be a 15-minute chart, an hourly chart, a 4-hour chart, a daily chart, a weekly chart, 3-month chart, a 5-hour chart, whatever time frame, it doesn't matter. But you need to know what's in this green box. That's the draw on liquidity. That's where the algorithm is going to be repricing. Because if you don't know that, everything else, every PD array is going to fail you, because you don't know where it's trying to go to. If you know where it's likely to go to, given enough time studying the market like that, it makes it very clear to see every instrument I've taught you in PD arrays. You'll find the ones that exist in price, and you work with those. It's not like it's hidden, like they're hiding some fair value gap there you can't see. It's either there or it's not. It's either going to have an up close candle in this price leg or this price leg that's going to act as a bearish order block, or it's not. It's not hidden from you, is what I'm saying. And you're going to find that if you can just strip your trading down to the most obvious things, try not to make it seem so mystical, okay, or too high and lofty, or just overcomplicated. It may seem that way because I have a lot of things I've been teaching you, but not every price swing has every element that is available to the algorithm. The algorithm is going to see what price is done in the past, because it's done what it's done based on what it's delivered. So it's going to refer back to its own old work. Well, we know that those signatures in price, what do I mean by that? The specific PD arrays, the old high, the rejection block, if it's got a wick, the consequent encroachment of that wick, because we treat it as a gap. And then you have the bearish order block. And then you have potential bearish propulsion candle. Then you have a potential fair value gap in the form of a sell side imbalance, buy side inefficiency. And you have volume imbalances that can be anywhere in between the bearish order block low and the next short-term low. So I got a question about that, so I'm tossing that in there just as extra credit, throwing that in there extra because I was asked, where does volume imbalances lie in the PDA rate matrix. It's anywhere between the order block, bearish order block's low, or above the bullish order block's high. It could be anywhere above that or below it relative to the order block. So the idea is you want to learn this right here. And also what you're looking at is this is the second half of a market maker sell model. So this is smart money reversal, some low risk sells over here, maybe in this price leg. Then you have an area of distribution. And what happens next? The second level of distribution, where it's going to be in a rush to get down there. So that's why it's important and why I'm even teaching you the market maker sell model and buy model. And if you understand it, you literally can make your own paycheck, whatever you want it to be. You get out there and get funded and just turn yourself loose on the world. Okay, and just literally just destroy it. But you have to understand what sets this leg up. Because if you don't have this, well, you don't know if it's going to be in a rush to get down there. But if you have this one behind you, and you have the old high being taken over here, and it breaks down, you have all of the confirmation of a market maker sell model in play in an existing bearish market. So you have all of the advantages of knowing that there's going to be a bearish order block in this leg or here, that if you see it trade up into that, it's hammer time. And just watch it walk right on into your target. And many times it'll just overshoot that as well. What I'm showing you here is literally the Holy Grail. Like, this is the blueprint to millionaire status. And it's literally easy, but you have to learn a lot of things to get all this stuff understood. And I'm showing you a lot of things with just simply with this line chart. And I could teach this lesson just like this on YouTube, and it would fly over 90% of people's heads because they haven't been here. They haven't gone through learning everything I'm teaching you. But this right here, this is the money train. Like, this is the easy, absolutely, like, put it this way. The laziest of all the interbank traders wait for this one because it's the easiest one. It runs right to their targets real fast. It usually has very little, if no drawdown, no pullbacks, no retracements. It's just straight on right into money. Now, the problem with this is you're going to want to see this so frequently. You're going to look at every little short-term rally and think, yeah, I'm so impatient, I can't stand it. This is going to be that thing. I want it to be this type of event that ICT is talking about. But it may not really be there because you're too new. Your infancy as an analyst is going to cloud your mind, and your impatience as a trader and gambler is going to make you think you're seeing this. And then when it runs through your order block and hits your stop, you're going to assume that what I just taught you here is not true. But for those individuals that have gone through Charter Level and been here for years, this lesson in itself is gold. Like I'm telling you, this is the blueprint. This is the absolute easiest way to assure yourself that the bearish order blocks that you're going to trade into in here are going to be the very ones that you can trust. Everything I said, obviously, for the sake of brevity, can be reversed and placed in this diagram too. But the idea is we have a market that's underlyingly bullish, and we have a market that went low, lower, and then we traded higher. So we have a breaker. Once it hits this breaker and starts to trade higher, once that occurs, we don't need to see this high taken out. Once this starts to trade higher, we know that there is a strong potential for this to go up into a objective. And this is where we're looking for what? That draw on liquidity. Okay, now this is the buy side of the curve of a market maker buy model. So this whole element here is what we're looking for bullish order blocks. The highest probability, easiest bullish order blocks are going to be inside this leg here and in here. So in the market trades down in either some down close candle in this leg or in here. If it trades down into that, that will be a ideal bullish order block, and you can trust it because it's going to be in a rush to get up into your target level. So with that in mind, let's take a look at